On Wednesday, Jay Powell will hold that press conference, his meeting, open market. I expect he'll talk about the need to stay vigilant and monitor the economy, which is Fed speaks for we'll cut rates if things get really bad. I think Powell may want to have more info than he currently has at his disposal before he takes action. Hey, that's okay. I get that. Expressing vigilance should be enough to keep the bulls happy. Wednesday night, we hear from Oracle, and this tech stock has quietly been moving up. It's up 18% for the year, even as there's always seemed to be some critics who are out saying that the business isn't as strong and they're losing share to Salesforce or Workday. Now, I'm not that particularly enamored of the stock, but at less than 15 times earnings next year, it is hard to dislike Oracle ahead of the quarter. Now, Thursday's a jam-packed day, and I find it going to be an exciting one. We've got Kroger, we've got Darden, and Canopy Growth. Kroger's been struggling against Walmart, which has gotten really aggressive with food. Against Amazon, obviously, that's Whole Foods, but much more than that. And Costco, they've done really well with food. Now, Target is really revitalized. They're all gunning for Kroger. These companies all have lower cost structures, and they want to carve up Kroger like a turkey. Same with Aldi and Lidl. Those are the two German companies that are vying for a lot of shares. It's tough to be in the grocery business these days, people. I'm glad I'm not in it. Kroger's been spending a lot of money trying to localize the stores, but this is a new world, and they can't seem to get any traction. Maybe this time will be different. I've got my eyes open. How about number 2, Darden, parent company of Olive Garden, which I view as the best-run restaurant chain in America for the value of it. I'm betting that the amazing CEO, Gene Lee, chosen by Starboard, by the way, will be able to tell a good story about Cheddar's Scratch Kitchen. That's a chain they purchased for $780 million a little over 2 years ago. This acquisition has left Wall Street scratching its collective head. But if Lee can explain why it made sense and maybe we see a little bit of a pickup, well, then Darden's going to get its mojo back. In the meantime, the stock's been pretty good anyway. Then there's Canopy Growth. Now, you've seen them on our show numerous times. That's the Canadian cannabis kingpin. They've got all that money, $4 billion from Constellation Brands, which owns, of course, Modelo and Corona in America. CEO Bruce Linton here always has a terrific story to tell. He's really been keen on talking about the medicinal and recreational benefits of marijuana. Still, I think this is another stock that will be range-bound until Canopy starts capitalizing on the medical side, especially because the outgoing FDA chairman, Scott Gottlieb, he was openly critical of the benefits of medical marijuana when he came on our network not that long ago. Hey, I pressed the fellow from Chewy today about whether they should be doing CBD dog food. They're not there yet either. I don't know. People got to get on the case. Speaking of medicine, Merck holds its analyst day on Thursday. I expect to be dazzled by the success of Keytruda. That is the miraculous anti-cancer drug that's been taking share from the competition for years now. I have been a big fan of Merck, and I bet they do a good job, good enough job, actually, that their chief rival, Bristol Myers, will see its stock get hit. So let me give you my advice here. I'm doing a little trading strategy. You buy Merck stock ahead of the meeting, particularly if it gets hit because of the Fed conference. Then you take the trade off, you ring the register on Merck, and you take the proceeds, and then you buy Bristol Myers if Bristol Myers stock goes down, as I think it will. Why? Because Bristol Myers is merging with Celgene. And once that happens, the analysts will have to raise numbers dramatically. Bristol Myers is the one to buy. Thursday, Tyson Foods will give us a look at how its business is doing. Now, hopefully, the meat and poultry titan will explain their strategy on plant-based nuggets and blended meats. Lots of short sellers are betting that Tyson can knock down Beyond Meat after this analyst meeting. Simplistic. There's room enough for both of them in the faux meat space. If the shorts press their bet against Beyond Meat, I think it will turn out to be a major mistake. Now, we all know the auto industry is struggling, right? But we can't say the same about the used car business because used cars are on fire. And that's why I think on Friday, CarMax will deliver yet another strong quarter. There's a lot to like here, especially now that long-term interest rates have come down, making it cheaper for people to get financing. It's really the short-term rates. If they come down, they'll explode in value. This stock will. If the Fed cuts short-term interest rates, wow, CarMax may be a good stock to buy. We'll also be watching a whole bunch of IPOs next week, but the big one is Slack. That's the collaboration software unicorn, which will go for what's known as a direct listing. No traditional IPO. You saw that, by the way, for Spotify. I can't get too excited about it, but so many of these newly minted stocks have been working that I want you to keep Slack on your radar screen. Bottom line, the most important thing to watch next week is Twitter. We're watching for a president who slags China regularly. Well, I think he's got a point. The stock market hates it. So be prepared to use any trade war-inspired weakness as a buying opportunity, particularly on that strategy that I suggested on the buy Merck, sell Merck, buy Bristol Myers. That's my plan for the week.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call. at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.